Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was a choppy event overnight with the markets whipsawing in many right across the board, with the Australian dollar rebounding off the lows are close to 71.60.70 with a low of 76. The market is back challenging that top side of the range, which is seen where the 60-day moving average is, which is around 72.35 to 45. In light of the pattern, we haven't quite broken to the upside, and I still feel the bears are lurking around this top side of the range, with the RSI not confirming the move overnight as yet, and also the MACD still playing in a sort of a lackluster pattern, is that the risk is for another downturn and might likely to see a bull trap as we get closer towards that top side of the range that was recently rejected. Still, from a technical point, I feel the broader outlook is still remaining to a somewhat bearish case, and therefore could see the Australian dollar eventually move down towards the region of 70.90. It was a choppy affair for the euro as the market briefly looked to that support level, which is seen around 113 figure 15. With the rebound, I'd say not strong enough to support a bull case, and therefore could see another challenge back towards this lower side of the range and eventually take it out and look lower, which towards of 112.30.40, and with the broad base holding around 111 figure 50. Dollar yen's bearish case is a little bit to view at the moment, that is, from that recent rejection of this doji, and therefore looks down towards the region of around 113.65. I feel that's where the bulls are likely to be harboring, as we since seeing this posted Japanese candle to the dragonfly doji. In light of the pattern, though, I say the choppiness will probably rebound from here and look back towards the region of 115.40.50. The market was a little bit whipsawed overnight for sterling, with a look towards 135.35.45, not eventuating. It got down to the lows around 135.87, and at present is still poised for another down test. Due to the MACD and the RSI supports the down test, but I feel the market will probably rebound from there, as we are seeing a bit of demand coming through from overnight's price action. If we do see a rebound, then I'm expecting to see a rise back towards the top side of the range from this base around 135.35 to 137.50. KGN still going sideways and capped by that resistance at 91.80 figure. Therefore, I feel with the RSI drifting lower and along with the MACD, eventually we will see a move down towards 90.60 and eventually down towards the region of 89.60.80 area. An interesting move for gold. It seems that the market may have got caught short. And the fact is that from the break above the 1,833 staged a rally up to 1,840 to 42 resistance, with 43 being the high. If you look ahead and with the risk that next week we've got the FRMC rate decision, and with much talk there may be a hike in March and maybe 3 to 4 hikes on the cards for this year, it would still play a bit of a downturn, I feel, for gold. With the market pricing in around 86% probability for a rate rise in March, the move up may find that the bulls will get trapped above this level or around this level, 1,840, and therefore see a downturn anywhere from here towards the bottom side of the range. Like previously, this strong rally gave it up in one heavy candle, retested it at 2 heavy candles, so I'm expecting, like we saw back here in November, another heavy candle about to emerge, and therefore could see the gains overnight given back rather quickly. Since the call of the target upside of $86 a barrel, the market got there and actually backed away. But still, keep an eye on this pattern here. I would feel that the market would need to break underneath the support level seen around $84 a barrel, and if seen, would see further weakness in the short term, but not getting too bearish, and look for a decline to about 81. If the bulls are still here, they would need to defend the level around 84 to rebound the price action back towards 88 and then reassess. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap, and also for keep an eye out for the intraday report as well.